one thing. I need you to ask yourself one thing. Am I going, because this is what I had to ask myself, am I going to be the asset or am I going to be the liability for my family? Ask yourself that question. If you're going to be an asset to your family's name, then you have to take the action. You have to take the action. You have to start putting yourself in a situation to where you learn how to accumulate tangible assets, which is why I talk about investing in the stock market, which is why I talk about investing in a foreign exchange, which is why I talk about investing in stock options, in futures, tangible assets, right? Tangible assets. Also, it's not just investing. Another important thing is acquiring the knowledge to be able to run a tangible business, right? That's very important. It's not just about investing. We need to acquire the knowledge where we can really make moves out here. To really become an asset to our family's name, we have to understand business. We have to understand investing. We have to understand taxes. We have to understand how to leverage, right? Leveraging, right? We have to understand these things. We have to understand real estate, right? And I'll be quite honest with you, man. What keeps us from transitioning to the next phase, fam, is the lack of knowledge. That's really what keeps the community down. That's really what keeps us down. Okay, so let's dive into this. Right? And what I want to show you is you might have never seen this particular asset. This is live cattle. In the futures market. I trade futures, I trade forex, I trade the stock market, I trade cryptocurrency, right? I'm all in. Because with my strategy you can trade anything. So I want to show you this. This was on this is the 5 minute right here. This is the 5 minute chart right here. And you see this rejection on a 5 minute. This is what I want to show you. This is how I'm really being able to identify these rejections. Because once you can identify this rejection, the market begins to make sense. Now, you always want to identify these rejections at the high, close to the high or close to the low. Here's a rejection close to the low. You see the low right here, close to the high or close to the low. But this is on a 5 minute. Now, every time frame has these levels, right? So I was trading cattle, and it sounds kind of crazy. Yeah, you could trade live cattle. I was trading cattle. I was chilling on the daily, and I saw this rejection. First, I marked off the high. Up here, right? Rejection from the high. Whenever there's a point and there's nothing left, there's nothing above this, and you see price go the other way, you need to identify these levels on the daily. This is what I call an institutional level. This is a daily close. Guys. You have to identify this level right here, right? Price close right here. When it comes to a candle and the psychology behind the candle, the Japanese candlestick, there's a site. We are trading with Japanese candlesticks. You need to understand the psychology behind the candle. The reason why I like to put lines at the top of the wick, because this is the high, right? Price closes here. Price opened here. And this is the very low. Now, when you're on a daily candle, this is for the entire day, right? So if you have a high here and a close here, and an open here, that means price opened here, came up all the way to the high and rejected and closed here. It rejected from this high, and that's why this is an institutional level on the daily, weekly, or monthly chart. So when you see this on your trading view chart and you see the high here, the close here, here, let me mark this up for you real quick. Okay, you got the high here. This is the open. You got the open there. This was the high. This is the high. And then you got the close here, right? And this is the low of that daily candle. So you had an open, a low, a high, and a close. You need to understand that about candlestick. Um, you need to understand that about candlesticks, right? So that is why I marked the low on this candle. I marked the high on this candle because this is the previous day. This is the current day, right? Now, I need to know where the previous day low was. And this is the day that we're on. And there was a rejection today. And I saw the low here, right? For the previous day. This is the low. We closed here. So let's drop down to I marked these levels of the wicks of the highs and the lows. So that's the daily. When you drop down to the 1 hour, you begin to see these rejections. When you get to these highs and these lows, price is going to do one or two things. It's either going to break through or bounce off, right? So when I saw the close of this candle, it bounced off. It bounced off. It bounced off. This was a rejection, right? It bounced off and begun to sell. So when I saw that, that's the 1 hour, I dropped down to a lower time frame, like the 5 minute. And I said, okay, I want to sell this off. I see the rejection. Now, the way I was able to identify this on a 5 minute was this rejection with the wick, the high and the close and the open, right, of the candle. So I waited for this candle to finish. And when I saw this candle, I said, I'm going to get in because it rejected from this level, from this high already, from this high. And then I got into this trade and boom, we price beginning to descend because I was able to identify this rejection right here. So I talk about these rejections in my ebook, Trading Reversals, and that particular rejection is called a pin bar. I trade pin bars all of the time, right? You have a bearish pin bar, right? And then you also have a bullish pin bar, right? Long tail, real body, right? So literally, if you see this was a downtrend. And if you see this rejection from a level, usually 75% accuracy, 75% accuracy, you can enter on that next candle, right? When you see this pin bar rejection. Now, all of this information is in my playbook, Trading Reversals playbook. I'll drop the link for that for you guys. But yeah, man, you guys need to understand the Japanese candlestick and these pin bar. It's one of the most famous Japanese candlesticks. It is widely used by price action traders to determine reversal points in the market. That's why my ebook is called Trading Reversals. This is how I've been highly effective in the market, right? This pin bar is a rejection. It's a rejection from the high. This is the open. This is the close. So just so that we're clear, I need you to understand that rejections, number one, rejections happen. We look for rejections around the high and the low. We're looking for rejections around the high and the low. That's where you look for rejections. You're not going to look for them like in the middle, although these matter, but we're not so much worried about those. I want the rejection to be at the high or the low. That's where I'm looking for entries at, right? Mind you, I don't have any EMAs on here. This is strictly price action. So we want the rejections to be at the high or the low. We prefer to find these rejections on the daily. We prefer, this is number two. Number two, we prefer to find these rejections on the daily first before we drop down to smaller time frames. So this is a rejection from the high. And my rejection from the low is here. I didn't mark it on here, but I will now. The rejection from the low is right here. That's the rejection from the low. Okay. That's what we're looking for. Because listen, if you identify this and you get in on one of these three candles, you're out of there. And imagine catching all of those pips all the way up to the high. These are the type of plays that I'm trying to put you up. Again, this is just price action trading. This is just price act. This is not no indicators. This is just price action, right? I am a price action trader. So this right here is a doji. Um, you see this? This rejection right here, that's a pin bar. That's a pin bar. That's a pin bar rejection. So you could have sold these two candles. This is 2 days worth of selling. You see that? You see that rejection? 2 days worth of selling. This is another price action candle, a doji. This is a doji candle. When you see the momentum, sellers, the market is indecisive on the doji candle. When you see that near the high, you're going to look to sell. Look at that. You could have sold that sold off. And then from the daily, look what happens when we drop down to the 1 hour. Look what happens when we drop down to the 1 hour. You really see what happened at these levels on the 1 hour. You really see what happened at these rejection levels on the 1 hour. Boom, right? Boom. Boom. Rejection from close to the high, from the high. Boom. Oh, look at this one. These are rejections in this facility, in this area. Remember, I was teaching you guys about order blocks. Rejection from the order block. Order blocks are also close to the high and to the low. This is where buyers and sellers like to hang out at, right? So this came up here and kind of respected this order block level. This rejected from the order block. This rejected from the actual high, right? But this entire area is important to us as traders. This is right. This is an order block. This is the high on the 1 hour, right? We're getting rejections. So we can go, let's go to USD JPY. I really want you guys to focus on these rejections because when you understand how to use them, you're catching the entire move. So let's zoom in on this. This is on the daily, guys. And immediately we see a rejection from the low here. You see how I found that on the daily? You could actually put this, you could turn this on your trading view. You could turn this on. So right here, you go to settings and then you go to labels. And then right here, you could turn on the high and low price labels, okay, on your trading view. And that's going to give you the low and the high to make it easy to identify. So boom, you see this rejection? This is a pin bar slash doji right here. You see that? All you need to know is this one move, this one price action candle formation is a doji. You see this type of move close to the low, boom. Then you wait for that next candle. What you do is you mark this and then you mark the body. You mark the body and then boom, you drop down to the 1 hour. And once you get down to the 1 hour, you will see that this rejection right here, right? That's the first line we marked as a rejection on the low. We marked this from the daily. Drop down to the 1 hour. Check this out. This is how I'm killing them. Boom, we marked this second line at the bottom, at the open of the body candle, at the open of the body candle, this one. And then boom, all you do after that is you line it up. You put your long position right here and you wait. You risk about 20 pips, 25 pips or so. Put this right here. Put that under there. And you wait. And boom, you catch this whole play. And Watch this. When you catch plays from the low, from the daily, watch this. Look at what this did, y'all. From the low, it never came back. Look at that. From the low. You see what I'm trying to show you? Start charting on the daily, bro, and catch. This is a thousand pip move. Just by identifying one candle. Price action. No indicators. No indicators. If you want to throw the indicators in there, it gets nasty. Now, if you throw the DeLorean on here like this, there is a plethora of delos inside of here going up, but you understand the entire direction. So you're able to comfortably catch DeLoreans all through here. This is going to enhance your DeLorean experience, right? For my Delo heads, right? This is fire.